Okay, so for this video, I want to cover the Schedule L balance sheet per books that's included with a Form 1120 corporate tax return. So the Schedule L is required in every Form 1120 filing, but you can, under some circumstances, leave Schedule L blank. Right, so I've got an example Form 1120 and Schedule L here, and a slide which covers some of the rules and some of the exceptions for completing that form, but also includes why I think that you should always be filing and completing Schedule L, even though you might find that you don't have to. So the Schedule L is included with every Form 1120, even if you have to leave it blank or can leave it blank. Right, so Form 1120 includes a standard set of 6 pages, right? So it always includes Schedules L, J, K, L, M1, and M2, right? So if we look here at the Schedule L for this company, this is page 6 of a standard Form 1120 deck. So we have M1, M2, L, and then we've got Schedule K up here. Right, so those are included. Schedule J, Schedule C, dividends, inclusions, and other special deductions, and then page 1 of the Form 1120. Right, so if we jump back here to Schedule L first, and then we'll go back to the slide. So when do you need to complete Schedule L? So Schedule L is required to be completed and filled out if the corporation had $250,000 or greater in gross receipts during the year, and if the corporation had $250K or more in total assets at year end. If the corporation doesn't meet both those conditions, then it is permitted to leave Schedule L blank, right? And so we find this question on Schedule K. If we come up here to Schedule K, question 13 for the 2020 tax form, are the corporation's total receipts for the end of the year, for the tax year, and its total assets at the end of the year less than $250K? In this case, it is yes, right? So our corporation does fall within that range. And if yes, it says it's not required to complete L, M1, and M2. Instead, you can just enter the total amount of cash distributions here. Again, we're answering the question yes, but I'm going to go ahead and complete Schedule L anyway because I want to provide that information, and I'm also going to highlight why some circumstances it makes sense to do this. So if we go back to the slide, let's look at an example of where you would definitely need to file, right? So if you had Fake Consulting Business Inc., Delaware Corp., the company's total assets at year end are $450, and the company had $300K in gross receipts during the same tax period. So because this company meets both requirements, it has to complete Schedule L. There's no way around that, right? Schedule L should reflect the same balance sheet information for your internal accounting records. So if you keep your books in QuickBooks, Xero Accounting, Sage, some other type of software platform, you want Schedule L on the tax return to reflect that information that's included in your own records, right? Hence the balance sheet per books labeling on Schedule L. Now, why should you always complete it? Well, even if you fall below these thresholds, one, I just think it makes sense to have a more complete return. But I see this frequently with the Delaware Corporation issue. So Delaware computes its franchise taxes using either the authorized shares method or the assumed par value method. Now, under the assumed par value method, which generally results in a lower tax if you have a lot of shares outstanding, you have to disclose the corporation's gross assets on the franchise tax return. And so when you're on the online system and you're inputting that information, if your gross asset number is low, but you have a high number of authorized shares, it will adjust your franchise tax bill down. Now, in many cases, because this results in a lower franchise tax bill, Delaware might ask for a copy of your 1120 because it wants to be sure that the information you're reporting on the franchise tax return matches with what you put on your federal tax filing that went to the IRS. So it's kind of like a double check just to make sure that you're being honest when you're filing your franchise tax return so that you're paying the appropriate amount of franchise taxes, okay? And then overall, like I said, it's just more complete accounting. It's easier to verify the tax return is accurate because you'll have, your book income from the corporation, and the book income on Form 1120 and the balance sheet on 1120 will match your internal records, right? So your balance sheet per book should closely resemble what is on Schedule L, and then in the M1 reconciliations, you'll have your net income or loss per books, federal income tax per books. All of these numbers should line up, and that gives you a better indication that that your tax return is perhaps more accurate because it closely reflects what you have in your internal accounting records. So that covers it for this video. I hope that was helpful. If you have any questions, leave me a comment below, and I look forward to seeing you again soon. Thank you.